We're starting with Ed, who's on the line in Vancouver. Hi there, Ed.
Hi, good afternoon. Dave, the energy patch seems to be bouncing back a little bit, and my question's on Calfrac. Do you like the oil service sector a little bit at this time, and do they usually lead the energy patch, or do they lag it if there's a recovery? Okay. Thank you so much.
Okay. Great question. So this is obviously a big group in Canada, lots of stocks in the group. It has been a group that in general has been underperforming over the last 12 months. We've seen some small improvements in some of the producers, although I think it's really early stages. We've seen some basing out from a price perspective in some of the service companies. I think that the big risk right now is with low gas prices and big differentials, Canadian crude versus WTI. The question is where the spending budgets are going to be for the upcoming year, and we got a lot of capacity in the oil and gas services group. So if you think that the economy is going to continue to pick up here, you know, maybe you've got a market weight in the group. We don't. We think that really the pricing in natural gas and the pricing in the oil, the differential is going to remain wide. And it's a group that we think really probably doesn't get a good allocation. So I would stay away from the group in general.
Now, next up, we have Barry in Burnaby, BC. Speaking of energy, the company he wants to ask about just made a big play in that area. Go ahead, sir.
Can I please have your view on Freeport-McMoRan? It has taken such a tumble lately. Would you be a buyer at this point level, or would you hold or even sell? And if you wouldn't want Freeport, would you prefer to have Teck Resources? Thank you.
Okay. So, Barry, this is a sector, the basic materials sector, that I think you're seeing some money right now rotate into. And I think really it's the beginning of a new year. Very often at the beginning of a new year, there's optimism and hope that, you know, economy is going to heat up a little bit, that maybe commodity prices have a bit of a lift. If you look at really what we came into the end of last year with, it was some pretty weak gold pricing. Copper pricing still pretty mushy. Really no significant lift there. There are people that would say in a typical cycle, if you get a reacceleration, then this group should participate. I would say at this point there isn't enough evidence that that's the case to go and make a big allocation. We do have a small position in Teck Resources. And I want to say it's a small position. It's an entry position. If it continues to improve, then we would look to add to it. I think that right now Freeport is in the company in the process of going through a change in the investor base. You know, when they start to change the types of assets they're investing in, it changes up the mix. So I think that there's probably a little bit of turnover there. So I would not be a buyer of Freeport here. If you wanted to own something in the group, you could own Teck. And again, I think that it's early stage and you're kind of making some assumptions about where economic growth will go from here. I think there are still going to be, you know, some significant challenges, but I'd be more comfortable with Teck.
Do you have an opinion on Freeport's new strategy? They were copper and gold. Now they're copper gold energy, going back to their roots.
Right. I think that obviously they're making a bet that they should be participating in what, you know, is a significant oil and gas boom in North America. I think that does cause concern for existing shareholders who bought it maybe originally as a copper gold producer. Right. It creates some turnover in the shareholder base.
Probably similar to Barrick when they bought Equinox a couple of years ago.
I think that's true.
Yeah. Christine is in Toronto with an email on Wells Fargo, which comes out with earnings on Friday as we kick off earnings season tomorrow. What's your opinion for the long term on Wells Fargo? Warren Buffett's loved this for a long time. Do you?
Right. So, Christine, we have, if you look at our bank exposure, we don't have huge bank exposure. We have more U.S. bank exposure than Canadian bank exposure because we think that there's some pretty good value there and there's some second derivative changes, some improvements that are taking place. Wells Fargo, you know, is sort of the cream of the crop, and it trades at a valuation that would reflect that. It's about 1.8 times book value. I think maybe Bank of America might be more interesting in the near term with the possibility of a dividend increase coming at the end of the quarter. But this is a higher quality bank. I think that as a bank investor, what you want to ask is, where is the growth going to come from? We heard an interesting comment out of Ben Bernanke recently when he said it may be that the bank's lending standards in the mortgage market are still too tight. And, you know, as one of the analysts from RBC made the comment this morning, you forget that one of the Fed's key roles is regulating the banks. They may be signaling, you know, maybe a little bit looser lending standards. So if you saw the mortgage market continue to improve, then maybe Wells Fargo has an opportunity to grow the mortgage book. So I think that it's going to perform with the banks, probably not be one of the best performers. I think at this point, those folks that are working their way into the banks are looking more at Citigroup and Bank of America.
And just for disclosure purposes, which U.S. banks do you hold for clients?
We own Citigroup, we own Bank of America. We do own a small amount of Wells Fargo.
Okay, then. A short pause here with David Burrows. More of your questions on the other side after this.